I was all on Instagram, refreshing, waiting for the live. And then I was like, I'm not supposed to be here. So
there. No worries. Okay, awesome. Well, welcome. So glad that you're here with us today. You are a crowd favorite each and every single time that we have a conference. We always, look through the survey results. It's always, for us, it's always, we're trying to improve on next time. We're always asking which, courses were your favorite? Who do you want to see back? Each and every single time you're a crowd favorite.
yay.
We always want to see you back. So as often as we can interact with you, we love it.
No, I love it. I'm always glad to be able to share this information, and especially hearing how much value people get out of it, because I don't know where you get it. Otherwise, it's exciting to be able to stand in that gap.
Yes. We talk about this a lot, I feel like, in this just field in general. And I think just as like different generations, of course, myself being a millennial, this is something I feel like myself and my friends talk about a lot, is like, no one taught us taxes. No one taught us accounting. No one taught us banking. No one taught us like any of this stuff growing up. And so, I think any of the presentations that you do always bring so much value to people, because they're like, no one taught me how to do this. They're, using TurboTax or something like that, H&R Block something. And they're like, what am I doing?
And it's also a reminder that your business is so much bigger than the thing that you do. Like, we have a lot of conversations about this idea that you go into business because you're good at a thing. I can write really well, or I take really good photos, or I cook, or I bake, or whatever those things are. And then there's this whole other side to the business that's like, that's real cool. But when you got paid for that, then what did you do with that money, and how did you track it, and where did it end up? And I just think that, especially in the glorification of entrepreneurship online and stuff like that, that side doesn't get talked about enough for you to really recognize that you got to wear both hats.
So true. And I think that's a big thing for a lot of people, is just trying to figure out that side of it. Well, I really jumped ahead of the game there. But if you want to go ahead, for those of us who are new, I'm just going to let you guys know this is being recorded. It'll go up on our YouTube later and up on a blog post. But I'm going to go ahead and have Keila introduce herself and kind of tell us who she is, what she does, not when she's with us. And just take it away.
Yeah, so my name is Keila Hill-Trawick. I run a boutique accounting firm called Little Fish Accounting, where we focus on tiny businesses. So almost all of our clients have one or two owners, are generally for one-on-one service in the 6 to 7 figure range annually. And what we really want to do is make sure that accounting is accessible. So if you're not in a position, aren't ready, don't want to, whatever the reasons are, that it doesn't make sense for you right now to move into one-on-one service, we want to make sure that there are other options. We have a podcast called Fish Food, which gives you bite-sized accounting advice every week. We have a blog and a newsletter. And then we're also building out a resource library. Again, this goal just being that you don't start at zero. Almost none of us are taught this information. I went to school for it, which is how I got it. But how can we make sure that you have some information so that you don't feel like you're starting without any guidance?
Love that. Yes, I just dropped in their website link for you all. The podcast, the resources, everything are available on there. Also, for any of you joining us today, you are automatically entered in a giveaway for a one-on-one 30-minute clarity call. Keila, can you also tell us a little bit more about that as well?
Yeah, so clarity calls are essentially paid consulting calls, but they go beyond accounting. A lot of people think that they have accounting questions that turn into like operations questions. And so we're answering everything from what do I need to be preparing for taxes, or, how should I set up my invoicing so that I'm capturing it properly? How do I follow up? How can I see who has not paid me yet? Like those kinds of questions that typically are a sense of, I have a goal that I'm trying to get to in how I manage clients or payments or my business, and just need some assistance in doing so. So we'll have 30 minutes where I say, you can ask whatever you want, kind of. I will answer everything that I can in that time period. And then we follow up with a document that's a recap with any links that I've provided for you, or any resources that you may not have asked for because you didn't know, but I know that you need them, so that you've got a little bit of extra information there too.
Love that. All right, well, to make sure that you guys are all entered to win, make sure that you drop a comment right now in the chat, just letting us know where you're tuning in from today, or say hello or anything like that. So we capture all your names, and we'll announce the winner in the collaborative site later. We're gonna hop right into it. You guys have submitted a bunch of questions that we're gonna go through, and then if we get through all of those in our allotted time, then we can answer some that you guys are dropping in the chat today. But I'm gonna go ahead and get us started with the first question, which is from Sarah saying, what is the best business practice for expensing groceries to your business?
Yeah. So one of the things that I talk about a lot and try to preach to you all constantly is separating your business from your personal. So first, have a business account. I think that anytime you have it going through your personal account, it can just be easy to pick up the groceries that you needed for work and also the groceries that you needed for the house, and then trying to split that when you get home. So to the extent that you can, buy those groceries separately out of your business account, which should be the same account that all of your business income is going into. Now, there are always times when it's like, yeah, but then I had to get like a couple of things for the house and there was some overlap. Again, we work with a lot of tiny businesses, so overlap is not new to us. When that happens, make sure that you're saving the receipt and then indicate on there where you bought something for the business or for personal, depending on how many there are. So if there are 10 items on that list and 4 of them were for a recipe, you want to easily identify what those are for and include it in your receipts and your accounting system so that it's just identifiable down the line. One point I want to make here is that generally the IRS is not asking for your receipts. So when you go to file your tax returns, that shoebox full of receipts or Google Drive folder full of receipts, you typically don't have to give to your tax preparer. You are holding that as evidence so that if they do come back and ask questions, you've got backup for the numbers that you expensed.
Okay, that is super helpful to know. Another question we have is, do you write off your clothes, hair, makeup, nails, whatever for brand shoots, YouTube filmings?
So this is one of those it depends, which I hate giving y'all it depends answers. So the first thing with clothing, the general IRS answer is no, unless your clothing is branded or it's specific to the type of work you do. So think the white coat that you wear as a baker, or if a handyman had like a tool belt or coveralls that they had to wear, that would be a deductible expense. But usually the IRS is like those clothes that you're wearing for the brand shoot or for this YouTube video you could have worn elsewhere. And so we are not allowing you to take the deduction. Talk to your tax preparer, because I have seen instances where maybe there's a specific instance of clothing. So you had to go to a gala or you rented like a very fancy dress that you're not going to wear anywhere else. You only got it for this photography session. That might be something that we can look at as a deduction. In terms of beauty and hair, typically, if it is the day of, so you had to get your hair done, you had to get your makeup done because you were shooting, I will generally make some allowances if I can for that. Whereas if you buy makeup or hair products, usually you cannot, because yes, you used it for this day, but you are also going to use it to take care of yourself after the fact. So each situation can be a bit different, but the answer doesn't always have to be no.
Okay, awesome. Another question we have is for smaller businesses, so those making like under 6 figures, what apps or programs should people be using to track their finances?
So we are big proponents of QuickBooks. I like to say that QuickBooks doesn't pay us. So like use the one that actually works or that you'll actually use. But a couple of things that we really like about them is one, they integrate really well with other software. So if you're using like a Shopify or some other third-party apps that you need to talk to your accounting system, because they've been doing this so long, they generally have a lot of those integrations. The other thing is that it's commonly used. So if you have a bookkeeper or are looking for a bookkeeper or are looking for help on how to use it, there's a ton of videos and information out there because, again, they've been around so long. At the end of the day, you just want to sign up for accounting software that, one, feels intuitive to you. So is it easy for you to go in and categorize income and expenses? Is it easy for you to see where you've made a mistake? Can you pull financial reports and analyze them? There are other options like FreshBooks, which I like a lot. It can be a little bit It's not always very intuitive to find the details of things that you want to see, but it is an option. Wave is free. There's a reason it's free. It will baseline give you all of the things that you need. But I found even as an accountant, when I want to look for backup for things or what makes up this number, it's not always straightforward. They're constantly improving that platform. And again, $0 is always a pro. Know that you can change down the line too. So if you start this year because that's what feels like the best fit for you, try to do it for the year just because it's easier to cut over. But know that at any point you can just pull your reports from there for, say, the first 4 months, and then you moved on to something else where you're pulling the rest of your information.
Okay, that's awesome. Okay, well, another question that we have like multiple different like variations of the same question is basically people want to know, because I think we have people who are full-time bloggers, photographers, etc. But then we have people who are, you know, full-time engineers or lawyers or whatever. They want to know, you know, some people are saying like, how much of my paycheck should I set aside? But most people in blogging, you're not getting a paycheck. You're getting like, you know, a payment from, you could get a payment from TikTok. You could get a payment from a brand. Like how much of each of those checks should we be putting into savings for taxes?
Yeah. So the first thing to know is that you get taxed on profit, not payments. So if you make $100 and you spent $60, you are only taxed on the 40. So think about the fact that if you are saving out of each check that you're paid, you're likely over saving for taxes. Not a bad thing. I'd rather you be over prepared, but know that you're not taxed on that whole amount. When it comes to your tax return, you're going to put in your total revenue minus your total expenses, and what's left over is taxed. What that also means is that if you spend more than you make, you typically don't owe any taxes on that money. So keep that in mind as a start, especially if you're just starting or if you're in a building phase of your business. So you could be in this for a while, but like this is the year where I invest in new equipment and new software and a new laptop, and all of that is going to use up all the money that I made, then you're not going to have taxes as a result. As you will hear most people say, and probably a disclaimer that I should have said at the beginning, that I'm an accountant, but not your accountant. So I don't know your specific situation, but generally 30% is a pretty good idea of what you should put to the side. Most people fall in the 20 to 25% range for federal taxes and the 5 to 8% range for state taxes. So if at least you start with that from profit, it'll go a long way towards your estimates to make sure that you're not too far off. Now, know that at the end of the day, they're going to add all of your income together. So you'll have your W-2 income on one line, you'll have the income from your business on another line, investments, all of that stuff. It gets added up. And then the tax software will determine, based on the type of income and any deductions that you have, how much you owe in tax. And then that next line is payments that you've already made. So if you think about the fact that like the tax says, oh, you owe us $10,000, your next line is like, oh, I already paid you some of that. Y'all took some out of my check throughout the year and I made some estimated payments. Your goal is to pay as much as you can in advance through one of those two methods.
Yeah, and I think a lot of people here, like we have those split people, so some who are still working. So I think a lot of people, I even at my first Tastemaker conference last year, virtual, before I joined the team, you had said, oh yeah, there are these things called estimated payments. And I was like, oh, I should be making those. Okay. And so I think, you know, we've been trying to add them into like our Instagram posts to let people know like, hey, this is coming up. It happens quarterly. But yeah, that's just such an interesting thing. And I think the profits part, because I think a lot of us tend to think, okay, this is my check. And when I say a lot of us, I do mean myself. I've always put away 25%, just like, okay, I've got to save this up. I'm scared. I'm nervous. I have to put this aside. I'm worried. So yeah. That's literally the first time I'm hearing it. So I'm like, oh, cool, great.
And I will say that a lot of times it's easier, right? Like you haven't gone back to see how much you've paid in expenses. So you're like, I just want to do the part to make sure that there's money over there. So again, you're over prepared. It's not wrong. But I will say it's something to think about, especially when you're either like most of us, your income does this, and there's a whole bunch of money sitting in a tax account that's not going to come out. So just making sure that you're checking into that so that cash that you may need for other other parts of your business are available and don't feel like they're locked under a tax vaulting fee.
Yeah. I'm going to hop into the chat just really quick because it is related to it. So somebody said, how do you set up estimated payments if you can't afford a CPA yet?
Oh, yeah.
Yeah, if you could answer that one, that would be great.
So one thing about the IRS in states is they will make it easy to get their money from you. So you do not need an accountant to have to do this. For the IRS, you can go to irs.gov/payments. And when you go online, they'll have you fill out some stuff, your name, your social, how you filed last year, I think is identifying factors. And then you go in and say, you choose from a drop down, what year are you looking at? So that can get a little tricky at the beginning of the year. I'm paying for 2022 versus 2021. What are you paying for? On the IRS, there's literally a drop down that says this is for estimated tax. How much do you want to pay and from what account? Remember that in the big scheme of things, the IRS, these estimated payments are kind of on an honor system. They have no idea how much money you made. And so what you are doing is prepaying throughout the period so that you can settle up when you do your tax return. That being said, there's no benefit in underpaying because it will come out on your tax return. But what you're doing is just trying to give them some money throughout the year so that you're not as surprised. For the states, each state, of course, has its own way of handling this. But generally, they will, if you just like Google estimated payment state, you'll go generally to their Office of Tax and Revenue. Some of them have it really easy where you do the same thing as the IRS, name, social, this is how much I want to pay. Some of them have my tax accounts where you have to have a username and a password. You will log in. I like those a bit better because there's background. So I can go back and look to see what payments I've already made. But in either case, in any of the cases, make sure you're saving a copy of the receipt that you've paid. It'll make it easier during tax time because you can just give it to your tax preparer, but it's also evidence that you paid some of your taxes in advance.
Okay, I've opened the floodgates of this question, and I'm so sorry, guys. I was just giving a personal life example. So we got a few more questions in the chat box. Somebody is asking, so can you just do it at the end of the year, or do you have to do it quarterly?
So the IRS says you have to do it quarterly. What I will say is this. Two things. One, it's not like a credit card. So your IRS and most state payments are due April, June, September, and January 15th through the end of the month before. So April 15th is due to cover the income or profit that you earn January through March. If you get money on the 20th, pay them on the 20th. It's not a flat late charge. What I will add to that, you can pay it at the end of the year, but they are penalizing you for all of those late payments. So if you were supposed to pay in April and June and September and January, and you don't pay until you file your tax return, they take a quarter of that and they're like, 1/4 of this you were supposed to pay last April. You're a year late on that payment. You were supposed to pay us in June. You're 9 months late on that payment. The caveat is it's going to be a very small amount. I've never seen it be so excessive that it has fully changed behavior. But I'm not into you paying the IRS or the state any more money than you have to. So pay them as soon as you can. If you miss a payment, you miss April, pay as much as you can in June. If you miss several payments, pay as much as you can by January 15th. So first goal, meet the quarters. Second goal, pay as close as you can to the quarters. Third goal, pay by the end of the year. Almost the worst thing you can do is to save and pay all of it when you file your tax return.
Okay, we still do have another question about this.
No problem. It's time for that.
Yeah. So if you overpay because you're not itemizing deductions until the following year or the end of the year, will they give you a refund on that?
Yes. So quick kind of lesson about how taxes work that I kind of alluded to earlier. So you put in all of your income and that goes on kind of page 1 of your tax return. Then the second page is like, what do you need to deduct? Well, you got standard deductions. Did you have any children credits? All of these things. Actually, let's not talk about credits. Ignore that part. You got all these things. And then it's like, okay, so here's your taxable income. And based on that taxable income, this is what we have established is your tax. So in this example, we'll say that your tax is $10,000. everything that you did throughout the year was an estimate towards that tax. So when they were taking money out of your check every time you got paid, they're just trying to get close to what they think you'll owe on that money. When you make estimated payments, you're doing the same thing for cash or profit that you've gotten that hasn't been reported yet. So right after that $10,000, it'll say, cool, how much did we take out of your check throughout the year? How much was withheld? And then how much did you pay in estimated taxes? In this case, if the total of that was $14,000, you've got a refund coming. If you underpaid, because again, you were estimating, then you have to pay the difference. This is also a note where I want to say, this is why it's important that when tax preparers say they can get you a refund, I can get you the biggest refund. We don't get you refunds. We tie all of your information together. Your tax return is essentially settling up based on everything that happened. This is what actually ended up being the result at the end of the year and what your taxes were going to be. And so if you've overpaid, you are absolutely due a refund. What I would say is, as you get better at it, you want to get close to breaking even, because I'm sure you've heard this before. If you're getting a refund, that's cash that you didn't have throughout the year. And so those months when you needed extra money, the IRS was just holding it until you filed your return.
Yeah, I think a lot of people almost see it as like a gift, and everybody's always like, oh, I'm going to use my refund to do this thing. And I'm like, maybe you actually want to save it or something, because it might be one of those like rainy day fund things that you maybe need.
And just to add to that real fast, I think that's also a reminder that that refund is your money. The IRS and the state didn't give you some money out of their bank account. It's just money that you gave them more than they were supposed to have. And so if you remember it that way, when you get your tax return, you got a refund, a literal refund. You got some of your own money back. It's not free. It's just money that you kind of use them as a savings account throughout the year.
Right. It's not like the government is giving you some type of stimulation check. Like it's not a thing. People
it's your money back.
And I think that is a difference, just like when you're thinking like full-time job, part-time job, W-2 versus like having your own business. It's just such a different way of thinking about it, I guess. Okay, so this kind of ties in a little bit with the next questions that we have. A lot of them are kind of around like people who have small businesses under 6 figures again. What kind of investing should they be doing? Should they be doing savings for their own retirement funds? There isn't something built in place for them like there is at like a company or an office. So what type of things should they start to do and when?
So I'm not a financial planner, but here is how we generally advise clients. So if you think about kind of the buckets of money, the first one is we want you to have a separate bank account, right? So we want you to have a separate bank account, and I would advise that you have 2. One for operating, so the stuff that it takes to actually do the business, and one for your taxes. The reason it's really important that you have a separate account for your taxes is because I want you to remember that that money doesn't belong to you. And if it sits in your operating account, it seems like that money is available to you. And then it feels like money has been taken from you when you have to do your estimated taxes. So start off 2 accounts, operating account, taxes account. Every month you're putting 30-ish% to the side for your taxes. In your operating account, I want you to save based on however comfortable you feel about money, 1 to 3 months of expenses. So whatever it costs to run the business, you want 1 to 3 months in that operating account. Then once you've met those goals, I'm saving money for taxes. I've got 1 to 3 months in my checking account. Then I recommend that people open a business savings account and save 3 to 6 months. The reason that this savings account is going to be really important to you even before you get to retirement is because when you are working for yourself, or even when this is a strong side hustle, you pay for you. And so that is your safety net for the business. If you get sick, like people say, you eat what you kill. If you get sick, or if somebody needs you, or you have to fly out of the country at a moment's notice, the money that is left over in the business is what keeps your business going so that it's ready for you when you get back. So now we're at a point where we have 3 accounts. We've got an operating account with 1 to 3 months of expenses. We've got a taxes account that we just use to pay estimated taxes or whatever is owed. And we've got a savings account that's kind of our emergency fund for the business. For me, that is when you start thinking about retirement. And there's several options depending on your business type. You've got SEP IRA, you've got solo 401ks, and there are some limits on that based on the type of business that you are. But I would say that you want to get your short-term savings together first, especially as very tiny businesses, especially as, again, with most of us, our income does this. And so you're not getting a consistent amount throughout the year. And you just want to make sure that you've got a buffer of cash flow so that if anything goes wrong, somebody didn't pay their invoice on time, or you had to hire a contractor for a big project that you weren't prepared for, you've got some money left over that's not living for future you just yet.
Yeah, that's great. I think one of the things you also said last April was to have the account where all your money goes in and then pay yourself out of that account. And like, that was like a light bulb in me that was like, oh, like I am acting like an actual business, even though it is quote unquote my money, I need to be paying myself separately.
And that's a good point about depending on your business type. So if you're a sole proprietor or an LLC, the IRS says that all that profit is yours. So they don't care if you made $100,000 and you gave yourself 50. They're like, that whole 100 is yours. And so keep that in mind as you're transferring money out to yourself, unless you've elected to be treated as an SCorp, which I doubt we'll go into in a whole lot of detail today. But unless you've done that, all of the money that you pay yourself is just a draw. It's not a taxable event. And so you really do want to make sure that at the end of the day, it all went through your business and you gave yourself some money, because that's how you start figuring out, can I afford to pay myself later down the line? What does it cost to run the business versus the money that I take out to pay me? That gets easier than some of this went into my account and some of this went into my business account.
Yeah, that totally makes sense. Okay. Let's see what else we have on here. These are some of the repeat questions. Clearly everybody has the same thoughts there. Somebody said we use a family accountant. What I really need is a bookkeeper. Do you guys offer bookkeeping services, or is there something else I should do for this?
Yeah. So quick note for everybody who generally has this question, even though it hasn't been asked yet. Accountant is generally an overview term. So anybody that is in accounting can essentially be an accountant. You don't have to be a CPA. You don't have to be an enrolled agent. Like, I was an accountant before I was a CPA when I was working for the government. So that is not specific to this question, but just want to give you all kind of the breakdown. Colloquially, generally, when you hear accountant, people are talking about their tax person. But the reason that I bring that up is because all accountants do different things. So you have some bookkeepers who also do taxes. You've got some accountants who only do taxes and don't touch bookkeeping. You have firms like ours who do it as part of a larger service, but don't do it standalone. So we don't do bookkeeping as a standalone service, but I co-founded a business called Accountants of Color. It's accountantsofcolor.co. And we have a directory there of BIPOC accountants that you can search through based on the service that you're looking for. So we've listed them by bookkeeping, taxes, tax resolution, that kind of information. You can filter down for them for anything specific that you're looking for and contact one of those accountants to be able to assist.
I just added that link in there for you all as well. That's amazing. How I did not know that, I don't know. As a digital marketing person for our team, I feel like I'm always really digging into our speakers' stuff. So I'm like, oh, now I know this. And now maybe we'll be bugging everybody over there too.
We would love that.
Okay, perfect. Okay, so we have, oh, this is a good one. Should food bloggers, and you might not be able to answer it, and that's okay. Should food bloggers, freelancers, influencers have business insurance? And if so, what kind?
So I don't know the real answer to that. But I will say with any insurance, the answer is about risk. So how much risk are you willing to take on? How much risk are you putting yourself forward for? So there may be a different level of risk for somebody who say, I'm a food blogger, I work with specific partners, I put out what they ask for, I sign a contract and I move on, versus somebody who maybe has larger scale productions that requires a bunch of other people to be involved. The real answer is, if something happened or if you got sued, how much protection do you want to have? I will say in general, business insurance is super cheap. It's not an expense that unless you have to skip on it, you can. So it may be less of a question of should you and more of a question of how do you build that into the budget so that you make sure you're covered.
Okay, awesome. This one, part of it, I don't think you'll be able to answer, but that's okay. One of the questions was, how do we hire a 1099 contractor? How should we pay them? And then I think, something that we're working on with Tastemaker is trying to create some type of place for people to list their freelancing things that they do so that people will be able to hire them. But yeah, what's the best way to hire them and how should they pay them?
All right. So anytime you hire a contractor, you want two things in place: an independent contractor agreement. So something that says, I am hiring you for this specific thing. This is how much I'm paying you. You are a contractor, so I'm not taking any taxes out. And you can go work for other people and do whatever you want because you are free. You are a contractor. So that's not the legal version, but make sure you have an independent contractor agreement. The second thing is that you want to grab a W-9 from them. A W-9 gives you all of the informational stuff that you need to do a 1099 for them later. For me, it says two things. One, it's a reminder, you are a contractor. I'm not taking out taxes. You are also not getting paid under the table. The second thing that it does is makes it so that you're not chasing it down next year when you have to do their 1099. So build that into your process. They sign an independent contractor agreement and they sign a W-9. Or some freelancers or contractors have their own agreement that they'll share with you. And then in terms of paying them, pay people to the extent you can the same time, same way every time. We really like payroll systems like Gusto. We use Gusto a lot to pay contractors. One of the things that I really like about it, I have audit in my background. I love a paper trail, and Gusto makes it so that your contractors get something like a pay stub so they can go back and see what days they got paid, how much they got paid. They can pull their own W-9 when it's ready from their account. They can update their bank account information and their address if something changes. Like, it just takes manual things off of you. QuickBooks Payroll will also do this. I don't like QuickBooks Payroll as much because I have found that it's hard for me to go back and find information after the fact. You will have some contractors who will have a specific way that they want to get paid. To the extent that you can build them into your process, the better. If not, try to have them invoice you and you pay the invoice. You'll want to track on your end every time that you pay them in your accounting system how much, because at the end of the year, if you have paid them $600 or more, they need a 1099, and it just makes it easier for you to be able to pull a report and say, who did I pay more than $600 so that I can get that out to them. If you don't use something like a Gusto, there's online services that will develop 1099s for you. Think like a track1099.com or something like that, and they'll do them for like $3-4 a piece.
Awesome. Yeah, we use Gusto as well at Tastemaker. I'm technically a contracted worker. So yeah, we use that as well. And we maybe got that from you. Let's be real.
Good.
This one I think is a really good question that probably everyone here has is, when should you stop doing DIY accounting and have somebody take over your bookkeeping, accounting, taxes? This person says, I do it myself for my personal taxes, but I'm not trying to screw anything up here.
Yeah. I have a blog post about this and I'll drop a link in a little bit. But I'll say that usually I say ask a couple questions. One, how confident do you feel like doing it? Like, do you feel like you got a handle on this and you can keep on? Because if you can, invest your money where it makes sense. So in our terms, we generally think of tracking as the first step, then compliance, then advisory, then task. So tracking is bookkeeping. Am I putting things into the right buckets? Am I accounting for income and expenses correctly? In that case, if you're either not ready to give it away, or you figure, I think I could do the rest, I just need help with that, you're probably looking for a bookkeeper. Then we have compliance. Compliance is, all right, my books are in order. I am tracking my money the way that I'm supposed to, but I don't know if I'm gonna get these taxes right. Then you probably want to bring on a tax advisor, a tax preparer. Then we get to advisory. So now you're like, my bookkeeping is right. My taxes are being taken care of, but like, what do I do with these numbers? When I get financial reports throughout the year, what are they telling me and how should I use them? That's generally when you're going to hire a more ongoing accounting firm. That's somebody that's going to help you manage your financial stuff, or something in that range that's probably going to bring together bookkeeping and taxes and monthly advisory calls or something like that. And then finally, this is when you want to give away all the tasks. So usually you have a team at this point, you've generated enough revenue that you're like, I just don't want to touch nothing. I want somebody else to pay my people and chase after people who haven't paid me invoices and all of those things. And that's generally when you're looking at a controller or a virtual CFO person. So as you kind of go through those levels, those are the pieces that you want to give away. If at the very beginning, you're like, I either suck at or just don't want to do my bookkeeping, get a bookkeeper to get that stuff in order for you. And then it's like, I could do my bookkeeping or I feel good about it, but I don't feel as confident about my taxes, then get a tax preparer. One thing that I will mention here is make sure you get somebody who knows your business or has other clients like you. The influencer, blogger, all of that space is at least relatively new, and the IRS has not caught up. And so you just want to make sure that you have an accountant or a tax preparer that knows the rules well enough to know what is really black and white and what is gray.
That's awesome. Thank you. This one is a little lengthy. How critical is it to move money out of your business account for personal expenses? Is it okay as long as it's recorded? It says related. Can you take an owner's draw from your LLC or something like that with Cash App, Venmo, PayPal, or should it be a check?
I don't like Cash App and Venmo for anything, but it doesn't mean that you shouldn't. I think that it makes it harder to track when you're going back from your accounting because it has to sit somewhere else before it then gets transferred to the other account. It can just be easy to miss. What I recommend is it doesn't have to be a check. If you can do some kind of ACH, PayPal is pretty good. Then Cash App and Venmo if you have to at the end. Please don't pay anybody else like that though. Like everybody else, move them through a different system. But if you are paying yourself, Cash App or Venmo, that's fine. While you can take owner's draws pretty much as often or as not often as you want. Hold on one second, please. I think the UPS man came, which means I have more Amazon packages than I probably should. So if you are taking owner's draws, you can basically take them as often as you want. I will say from a business standpoint, though, that doesn't help you prepare. So to the extent that you can, figure out what you really need to pay yourself and put yourself on something like an allowance. If what you have figured out is I can probably afford to give myself about $1,000 a month, do that. And if you have to take some extra, take that extra if you need to, but try to make it as consistent as you can. I think it's easier to track and it's easier to budget. It's also a very easy way to see like how much your life is leaning on this business. And that gets really difficult when you can just move money whenever you want to.
Yes, I definitely try to set up like automatic payments, know that it's coming, know that I'm going to be able to pay my mortgage and my bills. Okay, this person says, when should you ask for 1099s when paying for a job?
Oh, okay. If I'm understanding this correctly, somebody paid you, but they have not given you your 1099. If I'm misunderstanding that, let me know. But I'm going to answer that question. The 1099s are due at the end of January. They have to be sent out by that point, but that could mean that you don't get it until the beginning of February. One thing I want to note here, I say this all the time, a 1099 is essentially a snitch document. You are supposed to record all of your income, whether you get a 1099 or not. The 1099 itself is just to say, Keila should report at least this much because I paid her. So if she records less than that, know that she's lying about something. So know that you should be reporting all of your income. If you don't get a 1099, it doesn't stop you from doing your taxes. It just acts as support to say that you're reporting the right amount of money.
Okay, great. Okay, so Lonnie wants to know, when in a startup investment mode, what amount of profit do they need to start having income completely separately and pay taxes?
So in terms of profit numbers, a healthy profit is usually about 20 to 25%. What I will say is at the very beginning, most people are at about 10 because you're spending so much to make so much. One, you want to not focus too much on the percentage as much as what your business needs right now. What is the right goal for where you are? If right now it's like, what would really be great is if we have 50% profit because I need to be able to pay myself more, that's way more important than kind of the industry standards. But if we're using industry standards, usually healthy is 20 to 25%. When you're first starting, you may be between 0 and 10, and you just want to track that to see if that's enough for what you're trying to get to.
Okay, awesome. All right, we have another question from Matt. He says, I have a full-time job, work from home, and am not reimbursed for home office expenses like internet, electricity, etc. by my employer. But I also have a food site, a single member LLC. Is it possible to include a larger portion of the home office expenses to cover the full-time job in my LLC?
So let's talk about the rules about home office expenses. There are two because the IRS loves rules and two. So the first one is that it has to be regularly used for the business. This means that when you are doing business or doing work for the business is being done in this space. And exclusively is the one that will probably catch you up. Exclusively means that this is not used for anything else and that it is only used as a home office. What I will say here, and talk to your tax preparer to make sure that this makes sense. This may be a situation where it's not an all or nothing, right? So let's say you've got a home office and 50% of the time it's used for work and 50% of the time it's used for a business. It may be that you can only take a portion of those home office expenses, but you can't say of the whole year, I spend an hour a week here for my business and I want to take half of the expenses for it. So definitely talk to your tax preparer about how much you're using it for each. But recognize that you're likely not going to be able to take the whole home office deduction because you're also using it for work that is not reimbursed. It still serves as a home office the whole time, but not always a home office for that business.
Okay, awesome. Yeah, we have now a bunch of questions coming in about that too. And I personally submitted a question because I just bought a house this last year and we made sure that I had a space for an office/studio for photography. Should I be writing off? So I had to buy a lot of stuff, right? That I never had before, like an actual desk,
yes,
shelves, things like that for all my props. Should I be writing off everything in this first year? Or is this one of those things that you're supposed to like gradually do over time?
Yeah, I would say that for the most part, you're going to write off everything in the first year. The IRS updated the rules, so the caps are a bit higher. I think they recognize that, like, oh, you might need 2 laptops or a laptop and an iPad, and that's going to easily go over the cap that they had before. So most of it, you're just going to expense that year. A couple of things too. One, you have direct and indirect expenses for a home office. So direct means the things that you were just talking about that you buy for the office. I needed a desk, I needed a chair, I had to buy lights, I painted this room, all of those things that were specifically for here. Then you have indirect expenses that are based on the size of your home office versus the size of your home. So if your home office represents, say, 15% of your whole house, you'd then be able to take 15% of utilities and rent and the internet and all of those things that actually support the whole house, but also influence your room. Another thing that I want to say about the home office is I live in DC where space is at a premium and you may not have a whole room. I have seen people use parts of rooms, closets, corners of the living room, as long as you can kind of carve out the square footage of that space as a percentage of or a proportion of the square footage of your whole house, it can still be used. It doesn't have to be the luxury of having a separate room for an office.
Yes, that was my situation for a very long time. It was like this part of the couch and this little tiny section of the living room and this part of the dining room only on this side of the table.
Exactly.
Okay, we have more questions about this now. Does exclusively an office mean like from 9 to 5 p.m. or does it mean like I can't use it, my guest room that?
Oh, yeah. You can't use it as, it can't be the guest room. And this actually happened a lot with the pandemic. Like if you used your dining room table at your desk, but it is also where your family eats, that's not a home office for the IRS. It is a convenience, but it's not a deduction.
And if it like morphed, like for us, we had a guest room, but it had to become my partner's office. We had to have everything and we didn't have anyone staying with us.
Yeah, that was us. That's how I got an office.
Yeah. My partner works with clients, and so legally I can't hear them.
Mm-hmm.
I don't hear them, so he had to have that room. So I was like, man, how did I not get that?
I should have brought that up in our contract.
Yeah. Okay, and then here's another one. If you are a food site and you spend most of their business time in the kitchen, can you deduct anything there? And then they
generally no, because it's not exclusive. If you have storage space that is specifically for the business or a prep space that you use just for the business, you may be able to take that. Usually though, unless you never eat your own food out of your kitchen, you're probably not going to be able to use it.
Yeah. I think that's also the weird one for a lot of people is like trying to and I just had this conversation with a friend, so it's not a question, but, you know, a lot of times it's like, okay, I bought this bag of flour for the business, but now we're making pasta tonight and we pulled out the same bag of flour, and it's hard to like differentiate between them.
Yeah, I mean, I'm not worried about that. If you buy a bag of flour and you made one recipe out of it and then you used it for your house for the whole rest of the time, think about that. But usually for ingredients, I think about intention. So if you had to buy a bag of flour because they don't come in 2 cups, I'm not going to go back and be like, but how much of that did you use for the business versus how much did you use for that? Typically what will happen, that'll happen a lot with very specific ingredients. So something that I had to buy just because I'm making this one kind of pasta that I am likely not to use frequently in other places. I'm like, well, then deduct the whole expense, because the only reason I had to buy it was for the business. So don't get too caught up in the granularity of it. But again, if you bought a 30-pound bag of flour because you and your family cook all of the time, I probably would not call that a business expense for the one cake that you had to make for a blog.
Yes, that makes sense. We were joking because I'll make a cocktail or something, and then I'll have to like put the tequila in a special area, and like, you don't touch this one, because like I don't drink and I don't want to keep having to buy tequila when I literally only made like 2 cocktails with it.
Exactly.
Why you're drinking it? And he's like, well, it's there and it's good tequila. And I'm like, no. So now I've been just buying the crappier stuff.
Yeah, exactly. This is not for you. You want the good
it's
stuff.
not for you. You don't want it. It's gross. Okay. This person says, I'm a newer blogger. I'm not making any money yet. How long can I write off expenses from my blog until I start actually making money or a profit?
This is kind of a question about hobbies. So people tend to have an expectation that if you lose enough money for enough time, the IRS will just reclassify your business as a hobby. That's not true. They're not moving anything. The thing with a hobby is that you cannot deduct a loss on a hobby. So the example that I always give is restoring old cars. You really love restoring old cars and you spend a lot of money towards it. The IRS is like, yeah, but I'm not going to give you a benefit for the money that you lost for investing in that. So a lot of businesses lose money for a long time, especially in food. Think about restaurants, think about influencers and bloggers and people who have to build up an audience in order to get paid. So your main thing is, one, that your expenses are accurate, that you are actually incurring the expenses that you say that you're spending on. And then 2, that you are in the business of making money. You're trying to make money. You got a website, you sent out pitches, you're making videos. Like, there is proof of the fact that you are trying to run a business out of this, as opposed to something like a hobby that's like, I never intended to get paid from this for real, but I spend a lot of money doing it. So just recognize that you're probably already on the right side of business. You either have an LLC or a business setup. You're investing in continuing education for you to kind of expand that business. All of those things are going to count towards you, but that the IRS is not going behind the scenes and just kind of hitting a switch to change you to something else.
Okay, I have 2 last questions. One of them is one I missed in the chat from earlier.
Cool.
If there's a monthly mastermind that's run by a single person, is that person a 1099 contractor, or is it kind of tracked as more of like a membership with dues and subscriptions?
So if you are a business owner who provides services to your business, for all intents and purposes, you are not an expense. All of that money belongs to you. So if you're the only person that's running it, then all of the profit already belong to you. And that includes any money that you would have taken out of the business. If you have a separate person who is running that mastermind for you, they would either be a contractor or an employee, depending on how you set them up.
Okay, and our last question, I think you went over this last, one of the virtual ones, should people be registering as an LLC, an SCorp? At what time do you do each of those in your small business?
So We will put a whole video about this in the resource library. But on a baseline, we usually tell people that once they're profiting about $50,000 to $75,000, you want to start thinking about an S-Corp. Real quick, an S-Corp allows you to reduce your tax burden because money that is left in the business that is not paid out in expenses, and you are now an expense, is taxed at a different rate. So when you're self-employed, you pay 3 taxes on all the money that you made. Medicare, Social Security, and withholding tax or income tax that you're used to, because all of it is considered earned to you. When you're an S-Corp, or not, you're an S-Corp, you elect to be taxed as an S-Corp. It's different. So as a LLC or sole proprietor, you make $100,000, you pay yourself 50, IRS is like, all these 3 taxes on this $100,000. If you're an S-Corp, you make $100,000, you pay yourself a reasonable salary. So in this example, we're going to use $50,000 as the reasonable salary. You get paid like any other W-2 employee. They take taxes out of your check every time you get paid and send them off. So you got 3 taxes on that money that you got paid as a salary because that's considered earned. The remaining 50 that's just business is only 1 tax, income tax. It doesn't have Medicare and Social Security because it's not considered earned. So that's how you're saving on the taxes. The reason I put kind of an asterisk beside, yes, 50 to 75K around, is that it is an administrative burden. Because now if you are paying yourself a reasonable salary, guess what? You're an employee, which means your business is an employer. You need to follow the laws to be an employer. Some of that will roll into HR, legal, employment law, workers' comp insurance, those kinds of things, even if you're the only employee. So you want to make sure that not only are you making enough profit for it to be worthwhile to save you taxes, but that you also have the support and possibly funds to set yourself up properly as an employer, so that as you're paying yourself as an employee, all of that background setup is made properly.
Okay, awesome. Yeah, I think a lot of us have that confusion of like, what part of my business am I in? Which level am I really at right now? And I think it is different when we're in something like you mentioned earlier, we're in something so new in comparison. Influencing, blogging, even people who are like, oh, I've been doing it for 10 years. It's like, that's new relative in the world of business. Like, that's new. And there is so much to learn from not just accounting, everything from tax, bookkeeping, everything like that. It's like just organization as a whole, legalities, contracts, things like that, that just like aren't as well known.
Yeah. And use your resources, right? Like, you know, if there's a free resource library that at least gets you to like, I should be thinking about this. You may still need to hire somebody to take care of it for you, to walk you through kind of the nuances of your business. But at the beginning, when you're not making that much money or you just started, I'm always like, start from a place of like, what do I need to know? And then if we can move from what do I need to know to now that I know it, what am I willing to do? You have a better sense of when you should hire help. Because the beginning might be like, oh, there's a bunch of stuff that I need to know when I'm profitable, but I don't make that much money yet, so it doesn't matter. And now when I'm profitable, if I need to think about these 3 things, can I do those on my own or should I hire somebody to help me with those? So use what you have, take advantage of smaller scale resources like a paid consult or a program that can walk you through how you can do it yourself with support until you can hire off for somebody to take it off your plate.
Yeah, love that. Okay, well, that was amazing. That's also our time, so I'm not going to ask any more questions, but just wanted to say thank you to you. Thank you to everybody who came today and asked such amazing questions. They were actually so different than other questions I feel like we've asked in the past. So I thought that was kind of cool and interesting to hear these new sides of it and how they kind of chain ran into like new questions. I was like, yeah, that does make sense to have questions about that. Like I said, you guys, we will do the giveaway. I recorded everyone who was here today and we will go through and we'll contact you about the giveaway. And then Keila, before we leave today, can you just tell everybody again where they can find you, website, Instagram, all of that?
Yep. So if you are interested in our services, even if you're not 6 figures, we've got a lot of free resources over there. The blog, the podcast, like I said, about the resource library, we've got free templates in there. We've got an ebook about S-Corps. We have an ebook called the starter kit. That's like, I don't even know where to start. What should I be thinking about? All of that is free. The podcast, again, is called Fish Food. It's on all of the major podcast platforms. I talk really fast, as you can see. So most of the episodes are less than 15 minutes and they come out every week. And then you can always catch us on Instagram. And we have a monthly newsletter, which again is just trying to make sure that you have tips and tricks and information to help support you as you decide and figure out where you are in business and when you need additional help.
Awesome. That was so helpful. Thank you all for joining us today. Thank you so much, Keila. We can't wait to, I'm sure, have you back for conferences to come. But yeah, have a great weekend, everyone. And thanks for joining us today.
Thank you, everybody. Bye.